Welcome back, Alpha Hunters. The markets are closed for the week of October the 6th of 2023. And let's go ahead and get going right through what went on this week. We had a nice little subtle gap down to start off the week on Monday. Not a whole lot kind of went on Monday. It was kind of a choppy day, kind of a nice little doji action there on Monday for the daily time frame. Nice little pump there right into the middle part of the day, and then we kind of dropped. And then in the afternoon, nice little pickup. Another little drop, and then we kind of rallied there for the last roughly hour and a half to kind of close out the day there on Monday. And then Tuesday, gap down, traded higher very briefly, and then the market just dropped. I think this is when we got JOLTS job data on Tuesday. So we dropped, we came down, we broke last week's low on Tuesday, and we kind of just rolled over and kind of rallied right there in the last 30 minutes, but kind of towards the bottom end there of Tuesday. Wednesday, nice little gap up, kind of rolled over towards Tuesday's low. Then middle part of the day, nice little rally, pulled back and rallied into the close as well. Thursday, nice little gap down, rolled over for the first, hour and a half or so. Then we pushed middle part of the day, and we had a little bit of a pullback, and then we pushed. Ended kind of towards the session highs. It was looking pretty good. The daily looked like a really nice wick. Even on the live stream on Thursday, I was saying, hey, we need to roll over in the market either Friday or very early next week, maybe Monday. Like if Friday we just kind of flat and just went sideways, because we broke down last week's low on Tuesday. And I was basically saying, like, if we don't break down Friday very soon, maybe Monday, but it needed to happen very soon, the market's going to have a counter rally, like a short squeeze type of rally. Well, Friday, we got some data out as well. Gap down roughly 0.5%, a little bit more than 0.5%. Kind of choppy there the first 45 minutes, but we never did get that flush, right? That flush, kind of like how you did Tuesday morning. We got the JOLTS data. We never got that flush lower to break through 420, really got to get through there. So the bears really couldn't get control of really pushing the market lower, and the bulls took it, and basically we just got that short squeeze. And next 2 hours, we just went on a run, and it ripped your face off. And I was kind of just mentioning, like, hey, like, we better get it, or there's going to be a very nice kind of counter trend rally here. And we got that. We got a very strong pop there on Friday, up in the middle part of the day. Nice little sideways pullback action, resting action here in the middle part of the day. And then we just can continue higher into the middle part of the day. Last hour and a half, a little bit of a pullback, but nothing crazy. Nothing crazy, just kind of pulling back off the highs. Did close back below 430 because we did trade above it there in that last hour and a half, but we did come back down. Now, what's very interesting about this time period, and I'm going to go a little bit off script than what I normally do, and I was kind of mentioning this on the live stream on Friday, was watch out if we push up on the market going into the end of the day and yields start to push higher. I'm going to look at the 10-year real quick. So this is when the market was rallying, when the 10-year yield was dropping, and it dropped all the way till about that 1045 candle right there, and then it kind of rallied into the end of the day. So if we go back and look at the SPY, 1045 right here, this is when the 10-year yield bottomed, but you see the market kept going higher. So I would be a little bit cautious right away on Monday, because if yields push higher and they open higher on Monday and they start pushing strong out the gate on Monday, we might see that this was just a short squeeze and people repositioning to get bearish, and it might just go right through on Monday. I don't know. To me, it seems like there's some pressure building to kind of go bearish, but not unexpected kind of seeing that on Friday, just due to the simple fact of we didn't get the follow-through breakdown from Tuesday's breakdown of last week's low. Sector rotation for the week. Energies, the lowest end. They had a really bad day there on Wednesday. Energies just got absolutely pounded on Wednesday. There was a couple bad days there this week for Energies. So, definitely at the lower end there for the week. Staples also down there on the lower end. And Staples, man, they've been getting hammered. And I mean hammered over the past couple of weeks. So, if you're looking for some opportunities to own some stocks, Staples look really, really good because they've been pounded over the past few weeks. Utilities also kind of in that boat as well, but utilities having a nice buyback on Friday. They gapped down pretty good, but the best intraday buying action was definitely seen on utilities, the XLU. Real estate also underperforming for the week. Materials, industrials, financials, and discretionaries all kind of underperforming the market there for the week. Healthcare outperforming this week. Communications outperforming, and tech leading the way. Federal Reserve balance sheet data ticked down a little bit more this week. That's 3 weeks in a row now where it's come down. It's down 0.8% week over week. So, okay, they are reducing the balance sheet. Actually, the lowest level we've had in quite some time, past a couple of months, all going all the way back to the beginning of July. So, okay, we'll see if they actually get below these 2 data points and make it go a little bit lower there on the Federal Reserve balance sheet data. The VIX did exactly what you thought it would have done this week. We broke down on the market earlier in the week. The VIX pushed higher, and then it pulled back as the market kind of tried to base out and rally towards the second half of the week. So, yeah, there you go. You got a nice pump and pullback for the week. The only thing I'll say is we did make a new high here on the VIX, and we actually are breaching a little bit over that 200 moving average and starting to flatten out here. That 100 daily moving average, a little bit of a flat out, kind of starting to uptick here a little bit. We'll see here over the next week, really kind of what that's going to continue to do. The DXY. Okay, so the DXY pushed up very strong to start the week on Monday. Tuesday, nice little top upper wick. Not a whole lot kind of going on there on Tuesday for the DXY, but pulled back very nicely Wednesday, Thursday, and Friday. Taking a look here at the intraday, it kind of looks like the 10-year yield. Very nice pop when we got the data this morning, the jobs data that we got Friday morning, and a very nice little pullback once the market started rallying. Basically, everything started correcting. A lot of things have moved a lot over the past few weeks. Do not kind of mistake this as, okay, here we go. This was the dip buying opportunity, and it's not a bad idea to maybe buy the dip. I get that. But you're still having dollar breaking out, and you're still having yields breaking out. Maybe not the best time. It seems like things maybe just resting and retesting. The Gold Trust, the GLD, very nice spot that it came down into. Kind of mentioned that, hey, you know what? Probably comes down, pauses here. I would still really like it in the low 160s. That to me would be the great spot to be. Probably picking up some GLD, but makes sense. Then at least pauses, finds a little bit of support here at this level. So we'll just see what continues to happen here. But I'd imagine it probably does continue to push lower, as I'd imagine the DXY does eventually continue to push higher. 10-year yield. Okay, everybody's talking about yields, man. All right, cool. It's the hot thing to talk about. Actually, yields are pretty boring to talk about, but they do matter quite a bit in the market. So we had a very nice pullback, Wednesday, Thursday. I mean, these were kind of a subtle pullback, not like, major reversals. Even Friday's action kind of combined with Wednesday. I know we got some wicks here up into the same area, but they're not major, changes of direction. They're just, a little bit extended from the moving averages. We had an acceleration from this trend line that we've kind of been in over the past couple of months, but we've had that acceleration here over the past 2 weeks. So things are just kind of resting, okay? And we could very easily kind of just continue to grind higher as, the moving averages kind of come up. So if we come out this next week and we push higher, yeah, I mean, watch out. Market probably gets wrecked, but what I'm really kind of thinking happened here on yields, at least, is probably just sideways consolidation. Sideways consolidation, watch for the moving average to come up. And once we get to Wednesday, Thursday, Friday, I would expect these things to continue to move higher, okay? And if that does happen, maybe next week we have a slow burn back down, and then we kind of accelerate some sell-off into the second half of next week. We'll see how that looks, but that's kind of what I would be watching. I would be watching yields. The 10-2 yield curve inversion is rapidly moving to the non-inverted area. It has moved here over the past 2-3 weeks. It has gone from negative 0.765% to it is now at negative 0.28%. So that just kind of tells you the kind of move that we've had here over the past few weeks, and it is looking pretty good to kind of just keep pushing towards that 0 level. It is getting close. I mean, maybe another week or two. We might be there if it continues on that path. And I'll look at this a little bit closer next week. But typically when we start to see these massive runs like this on the yield curve, once it's inverted to the non-inverted area, that is when we start to get major market sell-offs. So if that does coincide with us breaking through the 4,200 level on the SPX or 420 on the SPY, we might get sharp selling to come in if that happens. So if we haven't broken down next week, I'll take a little bit closer look at that. All right, taking a look here at week over week options change, and we saw quite a bit of options selling out here for October 20th, especially on the put side. Quite a bit of puts getting sold out there. And then nice amount of calls getting bought for November 17th. We've had some new expirations kind of get added in here. This Feb 16 was also added in. A lot of call selling out here for Jan 19 of 2024. Also some option selling out here for December expirations as well. So yeah, some weirdness kind of going on out there. Not like the normal looking week over week change here for options activity. All right, going to run through the different indices I kind of track here. So I want to kind of look at the weekly kind of time frames here and want you to kind of see really kind of what's going on for the whole year. The RSP here. Okay, so I'm going to take a look here at the total year performance. And the RSP is barely negative. It's not quite 1% negative, but it is down negative 0.85%. All right, interesting. Take a look at that DIA. The DIA is currently down. Well, actually, no, the DIA is currently up 0.85% for the year. Okay. All right, so DIA positive for the year. That's better than the RSP. IWM. Let's take a look at the IWM here. The IWM is, well, definitely negative. Let's see how much negative. It is negative about 0.75%. 0.77% negative for the year. All right, okay. I'm going to go to the SPY first before I go to the Qs. I'm kind of setting up for something, so yeah, we're going to have some fun here. SPY is currently up about 12.3%. 12.3% positive for the year. That is the SPY performance. The Qs, the triple Qs, the Qs. Current year-to-date performance, 37% positive. Think about that, 37% positive. RSP was negative 0.8% or so. DIA positive 0.8% or so. ISM, or IWM, not ISM, IWM is negative roughly 0.75%. SPY's up roughly 12%. The Qs are up 37%. So basically flat on the year, flat on the year, flat on the year. SPY up about 12%, 13%. And the Qs, it's the Qs up 37%. So basically what that's telling you, okay, is we are seeing everything not big tech, which is why they call it the Magnificent Seven for a reason, is getting hammered. And it's so funny because I'm going to go over 3 things here real quick. 3 things that make up the valuation of equities. Roughly these 3 things. High level. 1 is going to be, well, growth. What is the expected growth of really the underlying business? Like you can also look at economic data, GDP, unemployment, non-negative growth type metrics, ISM, manufacturing, all that kind of stuff. All that stuff looks at growth. And then obviously you look at the business side of growth. So that's number 1, is you look at growth. Number 2 is actually currency relationship. And what have we been seeing over the past several months? Well, we've seen the dollar actually get spurred into a nice bullish move here. So the dollar's actually gone on a nice little rip here. It's up 6 2/3% over the past couple of months. And that's a very nice move here on the DXY and the dollar. Well, here's the thing, okay? That is not good for, companies that report in dollars in the US because you have to take basically pounds or euros and you have to devalue them to dollars. Okay. So that is making it to where it's harder for companies and equities to actually maintain and hold up their valuations. Okay. Number 3 is the discount rate that you use to value future earnings back to today's value. And this is, well, yields, right? We talk a lot about yields on this channel. At least we have been over the past couple of months. That's not really my forte. It's not really an area I want to cover extensively, but you know what? Sometimes in trading and investing, you have to look and you have to be observant of the things that are moving in the marketplace. And we have been seeing yields have continued to rise here over the past several months, really ever since about May. You know, they've been in a nice uptrend. Even here over the past couple of weeks, they've accelerated. And honestly, it doesn't really look like they're going to slow down anytime soon. So 2 of the 3 are not moving in the equity's favor really at all. And I would actually be willing to say that 3 of the 3 are not moving in the equity's favor at all. Growth is only being okay data in the US. Outside of the US, like China, Europe, they are not having good growth economy metrics. Okay. And then point number 2, dollar. Well, if they're not growing and you have to devalue the currency from which you have to convert it from euros, pounds, yen to the US dollar, well, they're all getting devalued because the US dollar's been moving higher. And then number 3, all of those earnings that are getting devalued and growth is getting devalued overseas, well, now you have to discount it back to today's value at higher rates than what we were seeing just a couple months ago. So this is not really the best situation right now for equities. And when you kind of look at the situation we have now, I mean, I kind of mentioned last week, I kind of thought we would retest into the lower little pivot level that we had back in Friday, August 18th. But we didn't quite make it there last Friday. We kind of gapped up and faded down. Well, this Friday we gapped down and faded up, and we faded up pretty hard. But I could see us push a little bit higher on the SPY maybe next week, early week, Monday, Tuesday. If we push higher on the SPY, but the Qs are selling off, I would be very, very watchful of that scenario. If that starts to happen, if yields are moving higher, if the Qs are moving lower, but the SPY is maybe pushing just a little bit higher, and I'm not going to say it's going to be aggressively higher because it's going to be really tough for equities to move higher if yields continue to move higher. But if the Qs are moving lower and the SPY is moving just slightly higher, I would start to be probably a little bit more aggressive on looking to get bearish. Because if the Qs get through like the 360 level and maybe the SPY broke Friday's high and maybe start to look to reverse, I would start to be a little bit more aggressive on that, because I think all that Friday's action was really just short covering because we didn't immediately break through 420 and 4,200 on the SPX. That's about it. And I want you to think about this. Friday price action, very strong. Very strong bullish day on Friday. But think about this, okay? Just close your eyes. How much was the SPY up on Friday? It was up 1.2%. How much was yields down on Friday? The 10-year, the one I track mostly on this channel. The 10-year yield was higher, 1.82% on Friday. Think about that. Yields went higher on Friday, but the market rallied 1.2%. And that's not even counting the gap down that occurred on Friday. I've kind of mentioned it before. I really thought the line in the sand for the market's going to be that 4,200 level for the SPX, 420 on the SPY. And honestly, to me, it was very apparent this week that that is the line in the sand, because we traded under 421 3 out of the 5 days this week. And even on Thursday, we actually traded below 422. So that was 4 out of 5 days this week that we actually traded below 422. And man, I'm telling you, If we get through that 420 spot, I think it will flip the market. I didn't really think that was the most important level. I really thought the most important level was 433, this low that we had back in August. But I think everybody sees this level and how important it is. And once we breach that level, I think everybody will become a seller. So be very cognizant of really kind of some of the price action on yields, the Qs, and the SPY, and those relationships. Alrighty, have a great weekend and take care, Alpha Hunters.